Here's kind of the crux of it and where we're at now. I would say D-Day is here.
Hi, everyone. Welcome to Twin Shores Financial Biweekly Market Updates, where we share what we're seeing in the traditional and digital markets. I'm Alex Kaminer, the host, with Tim Nihill, our founder and CEO, and Alex Krieger, our digital markets analyst. For today's big topics, we're going to be talking about gold and silver, Bitcoin, Ethereum, of course, seeing why the price is where it is. And then we also want to touch on specifically office buildings and real estate, as we're seeing more and more people go into more remote or hybrid. We hope you enjoy the content. And if you do, please like and share, subscribe, and comment below. Tim, off to you.
Hello, everyone out there watching. Thank you very much for your time and listening into our biweekly update. I think from the traditional markets perspective, we've been a little quiet over the past couple weeks. It's kind of been the same sense, I would say, for 30 to 60 days. Yeah, the markets went up, they went down, Fed this, Fed that. Here's kind of the crux of it and where we're at now. I would say D-Day is here. What I mean by D-Day is I think people forget and have a recency bias, right? It's not what you've done for me over a period of time. It's what have you done for me lately? And so most people don't remember the crash of 2000. They don't remember the experience of 2008 for the most part, especially because you have a generation of young people that have just gotten in the workforce, started having families and all that stuff. But what everyone does remember is March of 2020. March of 2020, the markets dropped 40%. It's going to happen. This is coming. Except now it's going to be worse. If I was to put a timeline on this, I feel like if you're not prepared for this now, you have 30, maybe 60 days at most to get ready. Because by the time most people see what's about to happen, it's going to be too late. And it's going to be one of the most catastrophic things we're ever going to see in our lifetime. And that's no BS. I was chatting with a friend of mine and we were talking about the situation. I said to him, I have a curious question. Do you think the Romans knew about the fall of Roman Empire before the fall happened?
Sure.
No, right. All of a sudden, boom, the empire collapses. Well, that's what's happening in the United States. The United States system has completely collapsed, and now we're all about to feel the change and the ramifications that are on the way. So if you look at the most recent data coming out, we've already talked about bank balance, and we were talking about this months ago after the FDIC committee in November 9th of 2022, and now everybody is starting to talk about this. If you have your money in a bank, you have to understand that you are an unsecured creditor, which means your money is now the bank's money. It is not yours. And I saw stuff and we're reading stuff across the board that the expectation is, and this is not here in the US, but globally, most major banks are going to experience balance. What this means for individuals is you could go to your bank in 6 months, say, hey, I need my money. And they could say, we have it, but you don't have access to it. If you're not researching Dodd-Frank, if you're not researching bank balance, and you have a lot of your cash sitting in a bank, a checking and savings account, you got to get it out. It has to be in a brokerage account, a financial institution that's not a traditional custodial bank, because the banking system in the United States has collapsed. Actually, it collapsed September 17th, 2019. We just went to COVID and money printing and covered it up, right? So there's a massive, massive liquidity problem that we are about to hit and run into like a buzzsaw. It doesn't matter that the Federal Reserve is going to raise rates. Quite frankly, they're so blind to what's happening. And what people don't understand is the Federal Reserve never gets it right. And this one's going to cost people. So you can expect a major shock across every industry and every marketplace. It doesn't matter. I don't think any one thing is going to be insured. But we can expect a strong spike in the strength of the dollar. And then every single US dollar that's overseas is going to be sold and shipped back to the United States. And we are going to have a massive inflationary problem. We are going to have a massive banking issue. And this is not recession, this is depression. We've been in a recession for 3 quarters now. This is really, really bad. And some of the numbers that are coming out are even worse than we ever expected. So we are preparing for this because I think there's a tremendous investment opportunity that's going to show itself. And once we kind of get through this transition, there's a big boom on the other side. So a couple of things that you need to know about. So US government debt, half of the US government debt matures within the next 3 years. So that's 36 months. The current average rate on that debt is 1.7%. In order to continue functioning, the United States is going to have to refinance that debt. So half of the US debt, which we know is 30 some odd trillion, and that number goes up like nonstop. It's going to be refinanced at a percent of 4 to 5% versus 1.7. So your interest payments on $35 trillion is about to double. It's become comical. This is how bad it is, and no one's paying attention. And everyone's gonna see why central planning doesn't work. And we haven't. This system has not been capitalist in over 20 years. It got hijacked in the 90s, and it's moved towards central planning. So anyone that says capitalism doesn't work just doesn't know that what they're talking about. This isn't capitalism. All right, here's another good one. So central banks across the world in the last 12 months have purchased more gold in the last 12 months than they have in 55 years.
Cat's out of the bag.
Silver, nickel, plutonium, uranium, lithium, all prices manipulated by large institutional paper contracts, futures contracts, derivatives, naked calls, naked futures, uncovered calls, straddles, all that jazz. The paper markets in the commodity markets are about to explode, which means that all the paper contracts are about to go worthless, and then we're going to get real price discovery in the commodity market. Energy, oil, natural gas, coal are all going to explode. We have finally hit the point to where the rubber is going to meet the road in the next 3 to 6 to 12 months, and all of this is going to start playing out. And quite frankly, if you don't have 30 to 60 days, in the next 30 to 60 days, if you're not ready for this, it's going to be way too late, and you're going to completely miss the boat. And for people out there that are like, oh, I own, I have exposure in my gold and silver ETF, just know that those are paper contracts, and there's no real gold and silver backing that up. So there's a potential that your investment is not going to mimic and capture the potential gains that are going to happen when these commodity markets start to go back to real price discovery. The biggest thing is there's so many things that have become broken in the system. We have seen bank runs before. We haven't seen them since the 1980s in the United States. I think everyone's kind of fallen asleep on that because we're all used to this. Oh, the US dollar is strong, and that's my store of value, right? In this country, we're taught store dollars, don't store gold, don't store silver. Well, everything that's happening overseas, if you look at Nigeria and Turkey and the Middle Eastern countries, and even China is having massive problems, they are all going to start walking away from US treasuries and the US dollar because they've all bought in gold and silver for their reserves, and they're going to ship all the dollars that have been printed back to the United States. And that's where you finally have the fall of the United States system. We've gone from being responsible for 40% of the world's GDP to 20%. So the American influence is not as big as it used to be. So we're just saying, continue to prepare for this. We think there are going to be massive investment opportunities, as we see in real estate, believe it or not. There are going to be massive opportunities in commodities, gold, silver, Bitcoin, and energy. We think are just going to absolutely boom. But for those that are out there with the traditional asset allocation model, diversification, 401k jazz, those accounts are going to get completely pounded going forward. So that's kind of the update from that perspective. On top of that, the auto industry is collapsing. So Before COVID in 2019, I think it was like 3.5 million new cars were put into service, if you will. That number is down to about 1.1 million. So the number of new cars that are coming out and being bought and utilized on a year-to-year basis is down pretty much 66+% since 2019. On top of that, the entire subprime business lines, which could include mortgages, auto loans, has all collapsed. So we're starting to see the lenders are going out of business. This is a real big problem because if you look at the inventory for companies that have vehicles, Jeep has 127 days worth of inventory in stock. Mercedes, Porsche, Toyota, Hyundai, Kia, Honda have 27 to 35 days. We're going to start seeing credit calls because Americans are running out of money. I was talking with a friend of mine who lives in San Diego, and he said between house and car in taxes, you need to make $20,000 to $30,000 a month just to afford that, the costs out there. And he was like, yeah, my house is worth 2.5 million, but I can't buy a new house. He's like, I can sell, but what I have is never going to buy anything equivalent at the same price. So there is a massive problem that is about to rear its head. And this is something we've been waiting for about 2 years, and it all got covered up with COVID and money printing and all that jazz. But now we're at the time. 2023 is where a lot of this is going to play out. And eventually you're going to have to go, the US government and Treasury Department, they're going to have to go to, they're going to have to go back to the money printer. They're going to have to inject liquidity. They're going to have to inject capital. Otherwise, everything is just going to absolutely collapse. And if that happens, as my friend would say, print money or trigger the revolution, because that's how bad the U.S. economy and this financing game has got.
You're saying COVID keeps covering it up, and I think it just did a little bit more than that. I think it made it worse. It made the problem so much worse. And something that we're seeing today is in commercial real estate, specifically like office building and office spaces, especially in major cities, they're vacant. And nobody wants to buy them. People are not able to pay back their loans. Landlords are going into debt for these multi-million-dollar buildings that they just aren't able to afford anymore. And I think that's just another part of the problem.
Yeah, and I think COVID did expose it, right? Because we all remember that March.
Right.
And we went, whoa. But what covered it up was they injected trillions and trillions of dollars. And again, this is a problem that's been building since the 90s. And from after that 2008 crash, it was essentially the government came in and took over Wall Street, took over banks. And now we're all about to learn that central planning doesn't work and it's catastrophic.
Another thing that could easily bring it down is the debt ceiling that we're rapidly approaching. Every day we're getting closer to that. Debt in the United States is just it's an exponential growth.
Public and private credit card debt is at its worst, and the issue that we're seeing now is everyone's been buying everything on credit, and eventually the credit runs out, and we are about to hit the end of the line.
Before we dive too deep into like real estate and debt and the fall of society as we know it, let's talk a little bit more about crypto and what we're seeing there. Alex, what are we seeing in the crypto markets?
As Tim was saying, there's a big injection of liquidity coming into the markets. Like I think the CCP injected something of $1 trillion US dollars into the market in the month of January and February, which is very scaring. And then plus with the Binance dollar being in trouble and got sued by the SEC and having problems there, they're now banning that. I think all that money is shifting and pushing up the markets, and with no liquidity, like we have had this problems in the past, 3 to 5 months, we're just going up. There's no, you know what I mean? No one's selling at these prices. And I wouldn't either. Commodities are about to go through the roof.
Yeah. It's interesting because you know, you see someone like was it Robert Kiyosaki on the Rich Dad Poor Dad podcast has always been saying gold, silver, and Bitcoin. The SEC stuff will play out. Remember, Bitcoin is not a registered security. It's a commodity similar to currency. The SEC is looking at the rest of crypto protocols. That has yet to play out. What about the action that's happening in Dubai right now with the crypto world?
They are in full force of accepting it and welcoming a lot of crypto firms. I've been seeing a lot of firms are heading that way, and with the US tightening, I can see a lot more firms and crypto companies in the US moving out of our jurisdictions and saying sayonara to our innovation of being a leader in the fintech world. So I don't know. I think we just need to figure out safe regulations, but also I don't think a lot of Congress understands how it all works either.
It just really seems that honestly, this country is dying on the grave of banking. And innovation, I think, is starting to take over. And from our perspective, a generational issue is it's a system that doesn't work anymore. And quite frankly, the younger generations want nothing to do with it.
Just the predatory lending you see happening and the high interest rates. I don't know. I don't the younger generation like I see, I don't know how we could survive. Like, I don't know. Our generation can't own homes. It's hard as hell to own a home. Like, it's only going to get worse in the next couple of years. When the market does crash, if you don't have capital accessible, how are people going to be able to do
Right.
it? Like, if there is a bank run and stuff does go to shit where people have their money, you can't go out and buy a home even if you had the money to do it in the time of the crash. So to me, it's just scary. Our generation, our generation gets the shit end of the stick.
Or Gen X is in there too.
Yeah.
Just wait for my generation. We're not going to get anyhow. We'd be lucky if we get a box. Well, actually, something I did see, Home Depot is now selling tiny homes for 15 grand.
Cool.
Oh.
You can live in your parents' backyard in your tiny home.
Right, right. That's it.
It's 10,000 if you could put it together yourself.
Yourself.
No, that's IKEA.
Oh, that's IKEA. Sorry,
IKEA is selling the 10 grand tiny homes, but yeah, all the instructions are in Swedish.
That's awesome. So, Krieger, what do you think we're going to see in the next 30, 60 days in the crypto side of things?
You could I think we just stay stagnant here. For BTC, you could see this quarter I could see maybe highs of 32,000 and maybe retrace if we do have a black swan event, if everything does crash and burn, you could see a black swan event going back down to what you saw in COVID, 3,000 on BTC is what during that black swan event during COVID, March 2020, BTC hit 3 grand around there in that price range. And then within 2 or 3 days, it was back up to 10, 12 grand.
So it'll be a quick bounce.
Correct. There is no waiting. It's have your capital and you're on the exchange or wherever you're going to buy ready to go. Make sure you're prepared for it because go get your orders set even. Go put, like if you have the capital sitting waiting, just go put your orders in and sit and wait. There's no.
Or if you don't know how to do it, just call us and we'll do it for you.
Correct. For Ether, same range. You could see all the way up to 2,700, I think. Yeah, around 3,000 as the high and then retrace back down as low as 800. 80 was the price back in March for Ether, $80 during that drop.
Oh, during COVID.
During COVID, March 2020, it went down to $80.
Yeah, I don't know that we're ever going to go that low, but it could see what we just saw in the previous lows, maybe a little bit more.
800, yeah.
Yeah.
It also depends, like, what happens if all the unlocks happen for for Ether 2.0. So there's an extra 140 million worth of Ether that could be dumped at those prices, right?
Yeah.
So it could go lower, never saying it couldn't, but uh, I don't see it likely. I think we're going to be going sideways more. Accumulation for the next, I would say 400 days, around when the new Bitcoin halving comes out, looking like this time next year.
Should be it's going to be a very, very interesting 6 to 9 months.
All right, well, I think that's everything that we had planned to talk about today. Anything else, you guys?
For everyone out there, this is it. And it's not going to be pretty. And if you're not prepared for it, better do it now.
Crunch time. It's crunch time.
I'm not usually an alarmist, but this one's coming. And it's not gonna be good, and it's gonna be worse than what we saw in 2020.
What about 08?
Worse than 08. The biggest thing is people have just not been paying attention to the whole system's bankrupt. Banks don't have money, and the government doesn't have money. We're all in, and people don't have money. You have to remember, it's all paper assets. So it's paper money. It's not real wealth. It's fictional. So it's like the total, if you were to put a number on the value of all the physical assets, investment stocks in the world, housing, real estate, gold, silver, Bitcoin, all that stuff, the real true value of it is, let's say, 1 quadrillion US dollars. Now the paper worth of all the financial assets, including those real estate assets that a lot of the paper is tied to, that number is anywhere between 6 to 7 quadrillion dollars. So you're looking at a bubble that's about 6 to 7 to 1 that is about to pop. This one's going to hurt. But like with anything, there are some massively huge opportunities that, and even private deals that we're coming across, where you're just like, you have to do them because you know the payout on the other side.
Right.
Okay, answer me. The payout is in what, fiat again, though?
Well, it doesn't, we don't know what fiat is going to be on the other side of this. But if, now the case for central bank digital currencies have been made, and those are going to happen. We're going to use US dollars because that's what we've all been trained to do for now. I don't see the dollar going away. I still see the dollar being used, and maybe it gets a broader use case, but the value of it's going to be, especially for us in the States, it's going to be absolute shit.
Right. You're going to have hyperinflation on the dollar.
We are absolutely going to have hyperinflation. The Federal Reserve cannot raise rates high enough. They would have to go, we're at what, almost 6 right now?
Correct.
You have to double rates.
Yeah, they can't do that. Everyone will go bankrupt.
Bingo. Double rates. So this is no Paul Volcker moment. These guys have it wrong. The US was not so much in debt. We're in debt 150% to GDP. It's a problem. You got to go private deals. You got to go physical assets. You got to go commodities. It's the only way out. And understand, even in that, you might get kicked around a little bit, but at least you're going to come out of it a heck of a lot faster. Can you imagine your 401k that loses 50 to 60% and then takes 20 years just to recover that loss? Like, that's what we're looking at right now. We lost fiscal responsibility a long, long time ago. And then in the 90s, when you got rid of the Glass-Steagall Act, which separated banks from investment banking and basically kept the banking money away from the Wall Street guys, you put those two together, what the hell did you expect was going to happen?
Yep.
Right? Wall Street guys don't care. They're like, I don't give a shit. Right? As long as I'm making money, that's all I care about. Driving my Rolls Royce and my Benz.
On behalf of Twin Shores Financial, thank you all for tuning in. If you've enjoyed it and want to stay up to date on the markets, please tune in every other Thursday or Wednesday, depends on the week, for all of your financial information. Don't forget to like, share, and subscribe. And if you have any questions or comments, please put them down below. Tim, Alex, any last words?
Do your homework, invest wisely.
Not your keys, not your coins. Max bidding.
Max bidding.
Thank you, guys.